After a couple of weeks when US dollar show his weakness, we are looking at this main currency and wondering when this trend will come to an end. My guest and yours is David Jones, Chief Market Strategist from Capital.com. Hello, David.
Hi, hello.
David, last week we had some interesting employment data in the United States. Market was a little bit concerned after ADP showing his report with 167,000 new jobs. Expectation was around 1.5 million. On Friday, we had non-farm payrolls show that there were 1.7 million new jobs in July. And my question for you is, what's your view on employment in the United States? It is that good or that bad? What is your opinion?
You're right, it was a really confusing week because we had those numbers on Wednesday from ADP and everyone was quite worried about what the payrolls were going to look like. But in the end, the main employees on Friday came in slightly better than expected. And I think employment is very difficult at the moment because there is so much change. There's been so much government support because of the coronavirus, obviously. And also, so it's not really clear what companies are doing with when staff are going to be returned to work. Will some be laid off? But broadly speaking, the market did like that number and appears to have taken the view that perhaps the employment situation in the US or unemployment will not be as bad as was perhaps initially thought. So I think we did see a fairly positive reaction in the end by stock markets, a positive move by the US dollar. So I think markets feel and investors feel a bit more upbeat and positive towards the US economy and US employment after those non-farm payroll numbers.
Wednesday CPI may be interesting data. Market expectation are 0.3% and 0.2% for core CPI. Do you think that this data can change anything for US dollars?
I don't think so. I think at the moment, unless we get a massive surprise, and I don't think at the moment we're going to get a surprise from the inflation data, given the state of the world at the moment. So, we know the US Central Bank have committed to this zero interest rate policy for the next 2 years. Traditionally, if inflation started running away, one way to manage inflation is to raise interest rates. But I don't think we're anywhere near, at the moment at least, worrying about inflation. Perhaps later in the year, these CPI releases become more important. So whilst it's an interesting number to watch, I don't think we're going to see much in the way of market from that data.
So Friday, retail sales in the United States, this will be the main event for US dollar this week?
Yeah, I agree. I think it'd be really interesting because we all know how deserted many shopping streets and shopping malls have been over the latest months. But we have seen, of course, the shift to a bigger shift again to online shopping, with people being stuck at home and actually spending money. So I think it will be interesting. I think have had some positive surprises recently from these retail sales figures. So I think on Friday, the thing to watch is how much does it beat or fail against market expectations? And I think the market to watch, perhaps the market to watch all this week, will be the US dollar, because as you said, it has been very weak. We are seeing the dollar perhaps having a bit of strength over the last few days, and that retail data on Friday is going to be very important. So I'd watch how the US dollar reacts to see what the market thinks about it overall.
I'm very wondering what is your view on euro dollar, because we can see some kind of double top formation around 1.19, and if this main currency pair will go below 1.70, we will have opportunity for going to 1.15. And do you think it makes sense, or maybe trading using price formation is very risk strategy if we look at lately market volatility?
I think recently, trading using patterns, my background is technical analysis, so I'm a big fan of patterns, but I think because of the extreme moves we've seen, it has been quite difficult. I think as markets perhaps get more back to normal, then these approaches can become more valid. It's been an incredibly volatile year for for euro US dollar. You know, in March, it hit nearly much a 3-year low. As you say, we've pushed up to a 2-year high for euro, but perhaps there's a feeling it's gone a bit too far up here. So it wouldn't surprise me in the short term, at least, if we saw a bit of pressure on the euro for levels. I do think into the end of the year, we'll see further strength for the euro, but I think given how far it's moved since its March low, you know, it's more than 15% of March lows, I think even more than that, then perhaps we will see a bit of a profit up at these levels. So perhaps the euro is under a bit of pressure this week and the US dollar does a bit better.
Mm-hmm. And finally, looking at the Great Britain pound, this week we will have prelim GDP from United Kingdom, and expectations are around minus 20.5%. It's quite pessimistic, or maybe it's quite realistic. What's your view?
You're right. It is a really negative number, and I think if it does end up being about minus 20, minus 21%, the UK will have had the worst quarter out of all the major G7 countries, and there is that it reflects perhaps the slight slowness in the UK to react to locking down the economy. So it wouldn't surprise me if it was that bad, to be honest, you know, because we know how hard things have been hit here. We can also living in the UK here, you know, how things have really stopped months. And again, the pound has recovered really strongly. The pound has bounced back about 15% off the March lows. What will be interesting, as usual, is how does the market react? If we do get a negative number, but the pound doesn't fall sharply, it does suggest there's still a lot of optimism towards the UK's currency. So I think that could be quite a good trading signal. If the pound doesn't fall heavily, that perhaps we're going to see more pound strength in the months to come. But it's going to be really closely watched, I think, here in the UK to see just how bad the economy has been impacted over these last 3 months.
Great that you mentioned that, because I'm wondering about the cable. Do you think, what your view, your opinion as an analyst, do you think that now is the time for strength of the dollar, especially looking at this very high pessimism around the Great Britain pound, or maybe you have some other views on this asset?
I think in the short term, we could see a little bit of pound weakness. Again, it's gone from, in March, it hit its worst level in more than 30 years, the pound against the dollar. We went back to where it was in 1985. And we've seen, again, this very strong recovery, 10 to 20% recovery since then. So the pound and the euro have both moved very strongly against the US dollar. So perhaps up here, we will see a pause, you know, around about 130, the pound US. It wouldn't surprise me if the pound was a little bit weaker in the days ahead, but perhaps towards the end of the year we see more of a recovery. So I do think that perhaps the bigger story this week is US dollar strength. So we do see the pound weaken a little the next couple of weeks because it has come so far in the last few months or so.
David, thank you very much for this conversation. My guest and yours was David Jones, Chief Market Strategist from Capital.com.
Thank you very much.